Hello, Twin City homeowners, homebuyers, and realtors. The XP realtor, David Garvison. I just had to get away from winter a little bit, escape out here to Cancun, Mexico, because it is March, which means two things. One, we've only got a little bit left of winter before we get our spring weather. And two, we have 2 months for Day-to Dave to get to work. While I'm in Mexico, he's going to tell you what's going on with the real estate market in the Twin Cities. Let's take a look. Okay, gang, we're going to go backwards while updating the data this month and start with our magic ball number of months of inventory, where we remained less than 1 month of inventory, telling us that this seller's market will continue into the warmer weather to come. That number continues to push prices up, where we see the median price of a February home sale to $340,000, up over 8% from last year, and leaves us up over 9% year-to-date so far in 2022. Now that leads us to demand, and let's dig into this a little deeper, because in February we saw a big drop, 14% compared to last year, and down nearly 12% so far on the year. Now, it's important to remember that last February was the 12th month of a not normal year of data. So let's look back at 11 years of February demand data. We see that while we are still in the middle for demand this time of the year, it will be important to watch this number. Currently, we still see buyers rushing to every home hitting the market, but if we do see demand continue to drop, we could see the slowdown in the market we've been looking for. And later in this video, we'll talk about a few things that could impact that demand. Most likely, the drop in demand number is simply a result of our supply shortage. Fewer homes to sell means fewer homes to buy, and looking at the data, we see a little over 4,400 homes hitting the market is down about 7% in February. And that leaves us with about 800 fewer homes for buyers already in 2022. Now, we need to talk about the news and the impact it may have on our real estate market, and specifically the war in Ukraine. There's a lot of predictions going on about the impact, and from a human standpoint, our hearts go out to the families and all the people in the Ukraine. But in our videos, we take out the predictions and stick to the data. So let's look at 3 possible ways the war will impact our housing market. First, inflation had already been on the rise in 2022, but the war is having impacts on prices of many products, including energy and gas, which we are seeing all-time highs currently. And while gas prices had been trending up in 2022, following the Russia attacks on Ukraine, prices have exploded. All these higher costs could impact our housing market by impacting our housing demand, because buyers spending more money on everyday product may be less confident to commit to a larger housing payment. And the stock market doesn't react well to uncertainty, and the market is uncertain what Russia may do next. Looking at this chart, we see the Dow is down about 11% so far in 2022, and the NASDAQ is down nearly 20%. So with less cash to spend and the uncertainty of what's ahead, we could see some buyer reluctance to spend the money that they do have on a new home. That same uncertainty, though, has given pause to the rapidly increasing mortgage interest rates we've been seeing. Looking at where rates were headed, we have seen the rates dip over the last week. So while some opinions are that this is a temporary drop, it is a bit of good news for homebuyers and should allow the strong buyer demand to continue. We'll be keeping a watchful eye on all the data, so be sure to subscribe below and we'll keep you posted on all our real information. All right, gang, that's what Day-to Dave says has happened the first 2 months of 2022. I'm going to sit here in the sun for just a bit longer, but I hope you have a fantastic March. Enjoy the spring weather that's on its way, and we'll see you next time.